Hey everybody, this is Beth Durinsky from Odyssey Insurance and Investments, and you're listening to the podcast, Real Insurance Made Simple. As a working mom of young kids and a small business owner, I know firsthand life happens. So come along with me and learn how your insurance policies work when real life happens and you need them most. Hello, everybody, and welcome back to another episode of the Real Insurance Made Simple podcast. We are in our business mini-series, and this week should be a fairly quick and straightforward conversation on the commercial auto policy. And the reason it is going to be straightforward is because, in theory, they're pretty similar to your personal auto policy, which the majority of people already have and they're already familiar with. So let's dive right in and talk about the different parts of the commercial auto policy. You have your traditional bodily injury and property damage coverage for the other person. A lot of people are familiar with this on their auto policy in the form of what's called split limits, where you have a per person bodily injury limit, a per accident bodily injury limit, and then a property damage limit. And this can occur on a commercial auto. You can have split limits. Most commonly, we work with and we quote and we write commercial auto policies on a combined single limit. So what is the difference? Let's start by better understanding how split limits. Split limits, let's say we have $250,000 per person, $500,000 per accident, and $250,000 for property damage. This means in the event you're involved in an auto accident, when you're found at fault and say that you physically harm other people's body during that accident, and let's say there are 4 people that you physically harm in this accident, each person can collect up to $250,000 towards their bodily injury. However, the accident itself will not pay out more than $500,000. So let's say all 4 people need $250,000. It will actually be on a first come, first served basis, because once the payouts meet $500,000, it is at that point that the plan no longer pays for bodily injury for that particular accident. Separately, you have another limit of $250,000 for property damage. So the most that it will pay to replace someone's property is $250,000. So as long as you're not driving along and hitting like a very fancy Lamborghini, then you would be good. The other thing that you want to be careful on hitting, and when it comes to your property damage limit, is if for some reason you were to hit a building or do some major damage to a structure that would potentially exceed your property damage limit of $250,000. But aside from that, your everyday car on the road, you wouldn't exceed that limit. Or I guess if you were to hit or be at fault for multiple cars at one time, that's when you could look at exceeding that $250,000 property damage limit. So that is the summary and example of how split limits work. On the opposite side of things, you have the ability to do combined single limits. And essentially, a combined single limit means there's no bucket for bodily injury, there's no bucket for property damage, it's all one bucket. So in theory, this could be better in the event that you have a lot of bodily injury but no property damage. So if you have one combined single limit of $500,000, then you have a full bucket for $500,000 for one person, for 4 people, for 5 people. There's no per person limit. There's no per accident limit. It is just one limit for whatever the damage that is done, whether it be to someone's bodily injury or someone's property damage. It is one bucket and one limit for that accident. So it could also be a downfall, depending on the limit that you are choosing for the combined single limit. If you have a lot of bodily injury and a lot of property damage, it may not be sufficient, but that is always the risk we run when we're choosing limits. for our protection, for our liability protection. And you should really choose limits that are high enough to protect your assets in the business. That's a different conversation. But in theory, we typically quote 1 million combined single limit at a minimum if someone owns a business. If you're not sure what type of limits you have on your commercial auto policy, I would encourage you to reach out to your agent to review that option and make sure you completely understand the limits that you do have on your policy. There's also the coverage of medical payments, which is also on your standard personal auto policy that comes on a commercial auto policy. Medical payments are no question who's at fault. They're just going to pay those out. If someone's riding with you and they have a broken arm, they're not going to say you're at fault or you're not at fault, or they're not going to bicker about that. If someone has medical bills due to an accident, they're going to pay out those in medical payments up to the limit. 5,000 limit, 10,000 limit, 25,000 limit. You want to check on your policy to see your medical payment limit. But just like they're on a personal auto, the majority of time they are on a commercial auto as well. Something that is a little different on a commercial auto policy, but not on a personal auto policy as it relates to liability, is going to be your hired and non-owned auto. This is where a business asks an employee to, as an example, they ask their employee to drive to the bank to make a deposit. Or maybe they're a restaurant and they ran out of something that they use a lot of. It was a really busy weekend. Maybe they ran out of, I don't know, shredded cheese or baked potatoes, so they can have baked potatoes. So they run to the store. If the employee gets in a wreck while they are utilizing their personal car for the business purposes, essentially the business can be found at fault for that. Someone can choose to sue the business for their damages because the employee was utilizing their car on behalf of the business. This coverage does not come standard or default on all commercial auto policies. So if you are sending employees out on the road in their own vehicle, this is a coverage I would really encourage you to look into and check with your agent on. In addition to employee-owned vehicles, this endorsement also includes vehicles that are hired by the business, vehicles the business rents, leases, or even borrows. So just a few things to think about, because I do know there are some businesses out there that will rent different vehicles to do different things, or they may borrow a vehicle, lease a vehicle. Just check with your agent, check your policy if this is something that pertains to you in any way, to make sure you have the coverages you need in the event of a loss or an accident. Because let's be honest, that's the point of insurance, mitigating those risks that we cannot predict or foresee in the future. And as I previously stated, you really want to have a liability limit on your commercial auto policy that covers the assets of the business. In the event you are sued, you don't want to have a $2 or $4 million or even $5 million business net worth, but you're only carrying $1 million of combined single limit. If you are doing that and you are underinsured for liability purposes and the value or the net worth of your business exceeds the limit of liability that you're carrying on your commercial auto policy, you really set yourself up for your business to be put at stake in the event that a loss happens in an auto accident that exceeds that liability limit on commercial auto, and then you're paying that out of the business's pocket. Sometimes those $1 million claims are easier to get to than what you think when you're talking about a vehicle that's involved in accidents that happen in that front. So something to think about. The final piece of a commercial auto policy, again, is going to be very comparable to what we're used to on the personal auto side. And that's if you're choosing to have physical coverages on the vehicles. Comprehensive coverage. This is like your fire, theft, hail damage, whereas collision is you actually colliding with something, hitting another car, hitting a building, collision, and then towing coverage in the event that you break down, or loan and lease gap coverage. So comp and collision, you would have your deductible. The deductible is the amount you are responsible for first in the event of a loss. Towing typically doesn't have a deductible. Sometimes depends on the carrier. You go ahead and pay for the tow and they reimburse you, or some carriers will have a towing assistance card with a company that you have direct access to and will file the claim on your behalf. And then, of course, loan lease gap coverage is you have a loan on a vehicle or it's leased, and the difference essentially, like let's use a loan, for example, your loan value is $50,000 remaining balance when you get in an accident, but the actual value of the vehicle has depreciated. They're actually going to value it at $40,000. So at the time of the loss, the insurance company pays out $40,000. You are now responsible for the gap amount between $40,000 and $50,000 valuation of the vehicle. So some people choose to purchase gap coverage in order to cover that gap in the event the vehicle's a total loss. So you're not still paying on a vehicle or have a remaining balance of a vehicle that was previously totaled. In a nutshell, that is how your standard commercial auto policy works. Every carrier has its own little variations and endorsements that can be added on to help benefit you or beef up your commercial auto coverages. I would encourage you to reach out to an agent to review your commercial auto policy. Make sure you are covered to truly protect the business and the business assets. You want to make sure all of the drivers that you have driving any of your vehicles are listed on there. In the event of an accident, if they're not listed, there could potentially not be coverage. You want to make sure your mileage radius that you're traveling for business purposes is accurate. Just really do a total review with your agent to make sure everything is up to date. Again, if you need an agent to help you review that information, 812-932-2200. Here at Odyssey Insurance and Investments, we would love to sit down with you and really go through your policies and talk through what that looks like and the different options available. Otherwise, everybody have a wonderful and blessed day. Thank you all for listening today. We hope you found this episode helpful and informative as you navigate the world of insurance. As a reminder, this podcast is never for legal or professional advice, and you should always consult your local and licensed insurance professional. We wish you a week filled with love and blessings from the team at Odyssey Insurance and Investments.